What's going on? Welcome back to the channel. So today we're going to talk to you about the top 3 stocks to buy for November 2024. So I want to go over all the things that you need to know, but first make sure to hit that thumbs up. And with that, let's get right to it. On a side note, these are all large cap stocks. I'm going to do several videos, one of which is going to be small cap and micro, but this video is going to be for large cap. But starting off, ticker is AVGO, Broadcom. Pretty sure everyone knows what this company does, but there's a lot of key data right here that I'm not necessarily going to go over, but 808 billion in this case. Over the last 1 year, it is up 103.62%. This is what they do. On a side note, feel free to pause it and go through it. But essentially in this video, I want to go over what analysts are saying, what the technicals are pointing to, shorts, and just some short-term support and resistance points. So again, that's kind of the basis of that, but there's a lot of good information throughout here. Starting off though, earnings isn't set for November, but historically, you can kind of see over the last 10 years, it has averaged 8% in November, and it does have a 100% win rate. So you don't see that all too often. So historically, over the last 10 years, 100% of the time, Broadcom has moved higher, on average 8%. And normally, I'm not sure if you are able to tell or not based on previous videos, but I'm a big numbers individual. So seeing this is definitely a good start. But when it comes to analyst ratings, I will give you a quick overview of that. So latest analyst ratings, there was one that did come out yesterday, just maintained buy rating by Bank of America. As a consensus, $199.80 is all the ratings put together. And that does represent a 15.49% upside. Based on the 𝗖𝗢𝗡𝗡𝗖𝗧 technicals, which I do have up on here. On a side note, all this information is through IBKR through here. So if you want all this to be completely free, take a look at the link in the description below and also the comments. But 𝗖𝗢𝗡𝗡𝗖𝗧 technicals is having a pivot point of $169.30. So for as long as it is above that, which right now it is anticipated to hit between that $202 and $209 range. So definitely a lot more upside is anticipated. And based on this, it's not heavily shorted. Spoiler alert, none of the stocks I'm going to be talking on are squeeze plays, especially like large cap stocks generally aren't heavily shorted, but it's still good to analyze. 1.53% of the free float is being shorted, works out to be 70.55 million shares, and that equates to $11.99 billion. So yes, even though it's not the most heavily shorted stock, the amount of dollar value in Broadcom that's being shorted kind of is larger than some companies' just entire market cap in general. So it's kind of interesting. Generally, you have seen shorts getting a little bit more active with this company. It goes through these periodic spikes. So in September, and it looks like shorts are starting to re-enter once again. Even on Friday, shorts did increase roughly around 590,000 shares. For, once again, transparency, it's not a squeeze play, it's just for analysis, but essentially with the good stats behind it and analysts very optimistic on obviously the foreseeable future, good data, possibly even another 50 or maybe 25 basis point cut for the November 7th meeting. This is where you could see nice upside. And on a side note as well, what is coming in November is the whole election. So that could really propel a lot of these stocks even higher. But as of right now though, looking here with it at $173, it is trading between this pivot and this R1. So $179 and change is going to be the next strong resistance / target. 162 is going to be the strong support. In my opinion, technicals on Broadcom is really pointing to higher highs. And so yeah, we'll just have to wait and see. Like I already mentioned, technically their earnings is slated for December. Current estimates are $1.39 and $14.09 billion in revenue. Over the last 90 days, there is 20 positive and 8 negative revisions to the earnings per share. So this is stock number 1. Moving on to stock number 2. This one's a good one. Again, a lot of people I'm sure know what Costco is, but ticker is COST. Over the last 1 year, it is up 62.04%. Once again, a lot of good information over here. Seasonality, once again, has another 100% hit rate. And so on average, over the last 10 years, it does yield 6.01%. And that's just due to momentum in the broader market. Nothing to do with their earnings, because similarly, their earnings is slated for December. And so December the 12th estimated, they haven't actually announced it yet, where you see $3.78 for the earnings per share and $62.25 billion for that. But if you somehow do not know what Costco does, this is it right here. So feel free again to pause it and go through it. But essentially, right here, it does have the Elliott Wave Technicals pivot point of $866. For as long as it is above that, which right now it is anticipated to hit between that $939 range and $953. So a lot more upside is anticipated. Even going over to what the analysts are saying, basically there was a couple ones coming out. So 4 days ago, 950 buy rating, Morgan Stanley, and this is the rating, 61% for the analyst. 5 days ago, 1,016, so that is initiated coverage. Bernstein, buy, and this individual who has a 33% success rating. So, of course, take that with a grain of salt, but you're seeing more and more $1,000 ratings because Costco is a beast. Like, who on earth is going to bet against it? Like, definitely not me. But as a consensus of all these ratings, you have looks like an average of $948.18, and that does represent a 6.39% upside. But the Elliott Wave Technicals, like I said, is pointing to a little bit higher highs based on that. Similarly, it's not heavily shorted, so 1.4% of the free floats being shorted works out to be 6.18 million shares. I don't know if shorts are maybe getting out because of some specific data point that is really coming out or something along those lines, but they did just return quite a lot. Went from around 1.69% to where it is now. Like I said, not heavily shorted though, but still $5.51 billion is in shorts, or in Costco shorts. So very high stuff. Cost to borrow average is 0.63, and then utilization is 0.59. So good to analyze this information. Right now with it at $891, it is trading between these 2 points, so this S1 and the pivot. So 893 is going to be that next strong resistance slash target, and then $871 is going to be that next strong support. So Costco is definitely a stock that is honestly, I don't even know what could really stop it other than a technical recession. But buying power, a lot of the data points coming out for the foreseeable future kind of show like that we're about to enter into a expansionary stage of the market. So Costco would dramatically benefit from that. So yeah, that's one thing to add to your watch list. And finally, capping it all off is ticker TXN, Texas Instruments. And so right now sitting at $206 over the last 1 year, up 45.92%. In case you do not know, this is the company profile. And so 34,000 employees, founded in 1930. And the reason why this stock is here, because of, once again, another 100% hit rate. And this one yields roughly 6% over the last 10 years. So historically, these three stocks are really good ones to kind of add to your watch list just based on that fact alone. But moving on from here, going over what analysts are saying about Texas Instruments. There was a lot of ratings coming out 3 days ago, and that is corresponding with their recent earnings. So quickly going back over here just to give you an overview of that. So it was a triple beat. So $1.44 was the initial estimate, and they did beat it by 3 cents. Revenue, they beat it by 31.2 million. And so essentially the original estimate was 4.15 billion. So phenomenal stuff. Even going to looking at the foreseeable future, you're seeing a lot of good growth in double digit, especially 2025 and onwards. And even looking at revenue, still a lot of good growth in that regard. But analysts are giving pretty good ratings, so 250, 185, so that one wasn't necessarily all that great, but as a consensus, $213.28 is that price target, and that does represent 3.07% for an upside. So quickly moving over to the Elliott Wave Technicals, just to give you an overview of what they are saying. So it does have a pivot point of $201.90. For as long as it is above that, then it is anticipated to get between that 210 and 215 range. So this was all done prior to their earnings. So the earnings really did escalate and push it to kind of the higher end right here. But with a lot of good data points coming out, more potential rate cuts, elections, this is where you could see this stock just blow up like crazy. So once again, just watch for that 201 kind of pivot point. It's not heavily shorted once again, so 2.04% of the free floats being shorted works out to be 18.57 million shares. But on Friday, shorts did increase 423,000 shares. You don't see this too often though with large cap stocks, and that is this right here. So the cost to borrow minimum is negative, meaning there is a broker out there physically paying people to short this stock. So some signs of manipulation. Again, you don't typically see that with large cap stocks, but still I don't think that even matters all that much because it's not heavily shorted, and whatever else works out to be $3.75 billion in shorts. But still, it's nothing to really write home about. Aside from that, shorts been returning quite a lot from the peak of around 2.4% to where it is now. So something to kind of, once again, just anticipate and analyze. The fact that shorts are returning kind of shows that they see a lot more upside coming as well in the foreseeable future. But with it right now at $206 and change, it is trading between this pivot and this R1. So 204 is going to be that next strong support, followed by 211 is going to be the next strong resistance / target. And so just take note of 215, 221. Those are going to be the following kind of resistance levels. So yeah, all three stocks, historically speaking, are very bullish for November. Analysts seem to love all these companies. Essentially as well, quickly going over some of the short-term data points for this upcoming week that could really lay the foundation for a very bullish run. So quickly going over to this upcoming week. So you do have jobs data coming out. That is on right here, October the 29th. That is followed by GDP, then PCE, and then as well non-farm payroll, unemployment, and manufacturing data. All of which, like I said, could lay that good foundation down for that expansionary stage, potential 25 basis point cut, and then elections. So yeah, add all of these stocks to your watch list if you don't have them already. Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. And then once again, if you do like a lot of this good information here, take a look at 𝗖𝗢𝗡𝗘𝗖𝗧, link in the description below and also the comments for all of it to be completely free. And one final thing, if you like my channel, want to support the growth, I did launch memberships. So if you want to support, you can definitely join as a member. Or if you do want buy signals with stocks and options, there's also a tier for that as well. With all that said, appreciate all of you watching.